can use your life insurance policy that you applied for. I did not say you can use it to buy a house. That is not what I said. Mortgage life insurance simply means you have gone into a contract to buy a property and you have done 20-year contract. Borrow me $800,000. I'll be paying you 3,000 every year, every month for the next 20 years. What if death happens during that 20 years? The mortgage broker still needs their money. The mortgage lender still needs their money. How will they get their money back? So mortgage life insurance will pay what you are owing on that mortgage to the lender so that your family living in the house will not be evicted from the house. That is the meaning of mortgage life insurance. Mortgage life insurance is a very, very good product, but the benefit on the mortgage life insurance goes to the mortgage lender. Okay, it goes directly to the mortgage lender. And what that means is your family does not receive anything. Mortgage life insurance simply means you have insured your life during the amortization period, and if you are owing any amount of money during that amortization period, the lender that you are still owing money is going to receive their money so that your family living in the house will not be evicted. Okay, that is what mortgage life insurance does. But now, when you have your own personal life insurance, you can use it for the same thing, the same thing. The major difference is that your personal life insurance, the benefit goes to your family, right? And they can use the money for what they wish, what they want, whatever they want. So yes, so your personal life insurance policy should be able to offer you compassionate benefit, living benefit, option to use the policy when you're alive. The coverage should be large enough to cover your mortgage. That is, what is the value of the mortgage you bought? Is it $200,000 condo, apartment, $800 house, $2 million house that you bought? Your life insurance coverage should be able to pay that house, to be able to pay for that mortgage should in case that happens. Okay, so life insurance is useful when we are alive in Canada. There are three different types of life insurance in Canada. We have term insurance. Term insurance is the most affordable life insurance that we have in Canada, and it could be as affordable as $20, $30. But as good as it is, it has some limitation which some people do not pay attention to. I I got one text message from someone randomly, and she was like, "Let me see, I saw one advert. It's $15 life insurance. It's so cheap." I said, "Okay." Just like you are going to go and buy a car on Facebook Marketplace and expect it to break down at any point in time, expect that a $15 life insurance is okay, but it's going to expire at some point. By the time it expires and you want to renew, they actually you have to now decide if you want to renew it or you just want to leave it as it is, because by the time you want to renew it, you're already excuse me, you're already more you are older and advanced in age. The cost of renewing the term insurance is even more expensive. So let me explain it again. Term life insurance is good, is affordable. The only challenge is know that I am here to let you know that it has expiration date. It is going to expire. When it expires, you also need to understand that renewal is going to be expensive. Some people are not prepared for that, or they are not told. So by the time it happens, you will see them on social media crying for I don't know what. You bought a life insurance policy, you are paying $20, no problem. After 10 years, when it has expired and you want to renew, don't be surprised that the renewal is like 10 times what you were paying before. So in case you are not told, I am here to humbly tell you. I am here to humbly tell you. So now it is like renting a house or renting an apartment. You have to pay every single month. So for term insurance, if you don't pay within 30 days, that is your deduction for your term life insurance is today and you do not pay, after 30 days they are going to cancel the policy. Right, that is it. You don't pay, they cancel the policy. There is no contract when you don't pay. But for your permanent life insurance, maybe you had some financial challenges for some months, especially if you've had the permanent life insurance for some years, maybe 1 or 2 years, 5 years, and you have just financial challenges of 3 months, maybe you lost a job, you can go on premium holiday for that 3 months. You don't pay any policy, the policy is not cancelled, and you can now resume the contract by paying your monthly premium. So I'll say it again. Life insurance is useful for you. It is also useful for your family. Number one, life insurance can offer you compassionate benefit. Number two, it can offer you living benefit. Number three, if your life insurance has a cash value, you can harvest your you can harvest your cash value. That is the fruit of your labor. You can harvest a little bit of it when you are alive and enjoy yourself. Number four, your life insurance policy, your personal life insurance policy, you can use it as your mortgage life insurance. That statement needs to be explained because some people get so excited when they hear mortgage. I did not say your personal life insurance will pay for your mortgage. What I said is that insurance. You can use your personal life insurance as your mortgage life insurance. Mortgage life insurance pays your outstanding mortgage balance during the amortization period should in case death was to happen so that your family does not need to struggle paying for that mortgage. Right. What does that mean in simple English? You have decided to buy a house, $600,000, and you went into a contract with a lender. Lender, borrow me $600,000. I want to buy this house. Every month, I will be giving you 3,000 for the next 25 years. Lender say no problem. I will borrow you $600,000, but you are going to give me interest of 5%. And then you sign the contract. Then every month you start paying that for the next 25 years. But during that 25 years, what if death happens? If death happens, the lender needs their money. They are business people. The lender needs their money. So where does the lender get their money from? The lender can only get their money from your mortgage life insurance. If you did not have, no problem. They sell the house, they get their money. No questions asked. But if you want your family to have peace of mind in a property that you bought, then mortgage life insurance is important. So mortgage life insurance, the benefit goes to the lender, mortgage life insurance. But your personal life insurance, the benefit goes to your family. That is what happens with your personal life insurance. And people, do not mix your employer life insurance with your personal life insurance. Let's say God bless you, you're currently working with an employer that offers you life insurance. Fantastic. I always have this issue and I ask people, you tell me you have life insurance from your employer. Very good. But what is the coverage do you have? They don't know. They just know that they have. So what do you have? Do you have 10,000 life insurance, 1 million life insurance, 100,000 life insurance? Because you have to know what you have. You have to know what you have. So if an employer gives you 100,000 life insurance and you know that you bought a house of $600,000, how does $100,000 and 600,000, where do they meet? So it means your employer life insurance is not even enough. That is what it means. Now, apart from the fact that I've been able to prove to you that your employer life insurance is not enough. Number two, the employer that offers you benefits, whether health and dental benefits, life insurance, the day you resign from that job because you got another job, you lose the benefit from your former employer. That is what happens. And by that time, maybe you're 5 years older. So for you to get another life insurance is going to be a little bit more expensive, right? And the new job that you are going to, there's no guarantee that they're going to offer you life insurance. So currently your age, I do not know. But from now till you retire, you might change jobs like 5 times. Does that mean every single time you are going to face that challenge? Which is why we always advise our clients, get your personal life insurance. Get it as soon as today. Get it as soon as you can afford it. Don't delay. The older you get, thank you for letting me know. The older you get, it becomes more expensive. You are not saving money. You are not saving money by procrastinating setting up your life insurance. It's even going to be more expensive because as we get older, we get closer to that last day. And the funny thing about life is we all get older every single day. That is why the child that was born yesterday is already 1 day old. So we get older every single day. And because of that, our life insurance policy gets more expensive as we age as we age. So in Canada, it depends on your budget. There's life insurance based on your budget. If your budget is $50, fine, you're going to get life insurance of $50. If your budget is 1,000, 10,000, you're going to get life insurance worth $10,000 because you are able to invest and set up your life insurance at the same time. But that does not stop you from having different types of investment because there are some investments that are good for long term, there are investments that are good for short term, and you need to be able to have both and everything in between. You have long term investment, you have short term investment, and data has shown that long term investments are able to grow your money by 15%, 12%, and is the riskier your appetite for investment, the more the rate of return that you are able to enjoy. Okay, so your life insurance policy is useful to you, is also useful to your family. Reach out to set up your policy today. Thank you.